QuickBooks Online 2025. Record receipt of inventory with a bill form. The bill form created from a purchase order. The purchase order, the form used to request inventory from a vendor. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are in our QuickBooks Online Get Great Guitars 2025 project file we set up in a prior presentation, opening up the major financial statement reports, which are located, of course, on the left-hand side. We're in the standard reports under the favorites, right-clicking on the balance sheet to open a link in a new tab, right-clicking on the profit and loss, otherwise known as the income statement. Also opening a link in a new tab. Let's go to that middle tab, hamburger, close it, por favor. We're in the modern view mode, and in that mode, we select the drop-down because I want to see a custom date range tab going from 01/01/25 to 02/28/25. That's for a 2-month time period. I'm going to select the display in the modern view mode, drop down the transaction date because I'd like to see it in months. Closing that up, it has been refreshed automatically. We've got January and February of 25 side by side. Let's tab to the right and repeat the process. Hamburger, you need to close up. Dropping it down to see the custom dates, tab 01/01/25, tab 02/28/25, tab display, drop down, custom transaction date to see it in months, closing this up, and there we have the income statement 25 January, February side by side once again. All right, so now we're going to be going through the process of entering the transaction, recording the inventory after we requested the inventory with a purchase order. Let's do a quick recap using our flow chart of how this works out. So let's pull up the flow chart. Now remember that if you're dealing with inventory, we have to kind of think about how does the inventory process work? Are we tracking the inventory within QuickBooks or outside of QuickBooks? And not only that, but do I have the power to request the inventory before paying for the inventory? Not something we typically can do if we're buying something individually online from a vendor such as Amazon, for example, in which case we have to pay for it with a credit card or PayPal or whatever when we order it. But if we have control over the ability to say, I'd like to request the inventory and I'll pay you once I receive it, that's when we can use the purchase orders. That's the request for the inventory. No transaction actually happening at that point in time, but we want to track the purchase order because we can then convert the purchase order to a bill once we have received it. The imagining here for our practice problem being we sell guitars. Someone came into our shop. They said, I want this particular guitar from a vendor that we don't usually deal with, called Fender in our case, I believe is going to be the example here. And we said, okay, we will request the guitar from this new vendor, Fender, and we're going to put you on the purchase order, at least on our side of the purchase order as the customer, even though the vendor Fender doesn't need to know that information because I'm buying this guitar specifically for a customer. And that's going to record the purchase order. Then we're going to imagine, and this is the point we're at now, we get the guitar and a bill in the guitar. The paper bill we'll imagine. Now the paper bill we can see in normal parlance is called a bill. We can also call it an invoice from our vendor. But that's different from the bill form, which is a data input form in QuickBooks. Last month, we imagined that we received something like a bill form and just paid for it using a check form or an expense form, recording to the checking account right away. But this time, we're going to enter the bill form, the paper bill, into a bill form QuickBooks data input bill, which is going to increase the accounts payable and record the inventory at that point in time. And then next time, we will convert the guitar that we bought specifically for a customer to an invoice so that we can then invoice the client, finally getting some revenue from the transaction. Let's go back to the first tab and get a quick recap of how this goes. Going down to the expenses on the left-hand side, basically the vendor center, and we can close up the hamburger If I go to the expenses tab, we're going to get all the types of bills or forms that we can see, selecting the drop down, and I want to see the purchase order. So I'm on the purchase order. We can select the filter. We have the open purchase orders. That's what we want to see. So that's good. And we've got our open purchase order from Fender. So we're going to imagine now we have that guitar, that box guitar of Fender. Let's open this purchase order just to remember how we entered this. So we have the new vendor Fender, and down here we purchased a Squier guitar, or 20 of them, from the new vendor Fender, and we didn't assign it to a customer, it looks like in this case. So we don't have it going to a particular customer in this case, but I thought we assigned it to a customer. Anyway, we'll deal with that later. But that's going to be the idea. So now I'm going to close this back out, and now we have received the guitars. Now we can also track those purchase orders by going to the vendors tab, and we can filter by the purchase orders. And now we can go in here. I want to filter by the purchase orders, and there's Fender. And if I go into Fender, then we have once again the purchase order. If I select the drop down over here, we can copy to a bill. So if I copy to the bill this way, it will create the bill from Fender, populating the bill for us automatically. That's most likely the way we would do it most often. But we could, if I close this out, hit the plus button, where the plus button is up here now because I closed up the ham boogie, and we're in the vendor section. So we entered the purchase order. Now we're going to enter the bill. So I'm going to enter a bill form. And then if I type in Fender, the new vendor that we set up last time, then it's going to pop up on the right-hand side and say, hey, I'm paraphrasing. This is what QuickBooks is saying. Hey, I got this purchase order that you can use to populate the bill. Do you want to do that? And we're like, yeah, we do. Thanks, QuickBooks. And then we populate it. Boom. All right, let's tab through this thing. And we're going to say that we're going to enter a bill. And we're going to say it's on 02/22/24, let's say. So we'll have, we'll keep it there. Okay. Store permanent, bop, 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 bop. And then down here, we're not going to an actual category like with the expense form or bill form. This would be if we're entering the bill for like a telephone expense or something going to a particular account. But in our case, we are going to an inventory because we're buying inventory, and we want to track not only the inventory account, but also the units of inventory with a subledger. Now, I think we were supposed to have it assigned to a customer, which was new. So I'm going to type in here, new music stuff. And I didn't do that last time, and I should have, because I wanted to enter that into the purchase order, but we'll just add it as we go here. So I've got the bill form, and boom, for new music stuff. Now, if I had entered new music stuff into the purchase order, it would then have pulled into the customer field automatically over here, reminding us that we bought this for a particular customer. When I click off it, it disappears, but I think it's still there. It's kind of annoying. I wonder if I scrolled back. It's interesting that it does that. Okay. And then I could make it billable and taxable, which is going to pull it in then to something I can make an invoice from. Now, once again, we have to be careful with this billable component with regards to inventory, because when I pull it into the invoice, sometimes QuickBooks is not able to distinguish the fact that this is the cost of the inventory, and I'd like to pull it into the invoice using the sales price of inventory. So we have to be very careful with that. I'll demonstrate that again as we go through this process, but I want to be able to show that you can kind of link these two together. Remember that this billable thing works best really when you're doing a job cost system, for example, and you're buying supplies or something like that you would like to turn around and use in order to populate the invoice and then possibly mark up the invoice because it pulls in the cost. The inventory, again, gets a little bit wonky because we're actually using items here, and the items in this case have both a cost and a sales price, which are different, which again, you would think the system would be able to figure out, but they haven't. I keep on thinking they're going to figure it out and fix that issue, but no, we still have to be careful with it. So what's this going to do when we actually record it? Well, it's a bill form. So we want to remember that a bill form means for us that accounts receivable is going up. That's the first thing we want to remember. Accounts receivable is a liability account for the full amount of $3,360. The other side is going to go then usually to an expense if it was by category, if it was like the telephone bill or something like that. But we bought inventory. Therefore we're using the item. So the other side's going to be going to inventory because this item is driving the account that it's going to be going to, and it's going to be directing it, of course, to inventory. Now, we're also going to have a subledger that's going to be supporting the inventory, that's going to track the inventory by unit as well. And we're going to have a subledger for the accounts payable that's going to be supporting the accounts payable going up, tracking it by vendor. And we're going to have the customer item over here, which is going to be tracking the billable capacity to then bill this customer. So we got that information on the sales side of things. And the purchase order, which was open, will now be closed because we used the purchase order to populate the bill, indicating that we have received it. So let's check all that out and see if I can remember all that to check out. So let's save it and close it so we can check it out. And then it says add purchase order. Okay, hold on. I got the dates messed up again. Let me change this to 2025. This should be 2025 for crying out loud. All right, let's try it again. Thank you, QuickBooks, for not recording it messed up. That was helpful. Let's go to the middle here. We're gonna refresh this thing again. Let's run it to refresh it. Hit the little refresh button. And so now we've got the accounts payable down here. Went up, the A to the P, the app, AP, accounts payable. There's the bill for vendor, the new vendor. Let's go into it. That'll take us to the actual document. So there we have our bill. Boom, baby. Let's close it back up and go back to our form. Then we're going to go up into the inventory asset. Let's check it out if I could. And so there's our bill. We bought inventory, increasing the inventory in dollars. We also need to note that we're going to be tracking the inventory not just by dollar, but by the items or units of inventory. So let's go back. Let's go to the first tab and check out another report, the subledger, opening up the ham boogie, going down to the reports, closing up the ham boogie, and then we're going to go down. Let's go ahead and find it. Where do they put that? They put it under the sales and customers. I want this one, the inventory valuation summary, right-clicking on it to open in a new link. Let's go to that link that it opened in. We didn't just open it for nothing. We're going to check it out, you know. So it's as of today, that should be fine. So here's our units of inventory at this point in time, total units of inventory, which come out to a total amount of 9,626, which should tie out to what's on our balance sheet, 9,626. It does indeed. So that is good. Now we also have a subledger for the accounts payable breaking out who we owe the money to. But we often don't populate that accounts payable account in a form, but instead track it internally in, of course, the vendor center. So if I go back to the left-hand side and we open the ham boogie and we go down to the expenses, por ejemplo, and close up the ham boogie, if we go into the bills over here, that's where we can track the open bills that are outstanding. We're on unpaid bills. So we have the unpaid bills. Here's the overdue unpaid bill. If I go to the expenses tab, we can also track that information by selecting the drop down, looking at the bills, filtering by the bills that are open bills. And I'm going to scroll down and see if I can apply that. Now this one is kind of actually still good because you would think you would go over here just to the bills to track them. But the expenses is kind of nice because it gives you almost a report format because it sums up the bills. So I can confirm here if you wanted to without running a report that the total bills, 3,360, ties out to what's on the balance sheet of the 3,360, which is kind of nice. Going back to the first tab. Now, of course, what we're going to do after this, is we're going to, let me scroll back in, is we're going to pay the bill at some point in time. So of course we would then sort the bills, order the bills, try to pay them as late as possible. Remembering the general idea with the bills are that small companies might not enter bills a lot. So remember, if I go to the balance sheet, the accounts payable might not be something that you use all the time for small businesses, although the accounts receivable often is something used for small businesses if that business is in an industry where they have to invoice the client, they're not getting paid at the same point in time they do the work. The reason the bills, the accounts payable is not as common possibly for small businesses is because there's not a big benefit to basically delaying the payment of a bill, right? Because you get the time value of money. If I can pay it 15 days later, great, but that's not a big benefit unless I have a cash flow problem or there's a big number of transactions. The transactions are high in dollar amount or there's a lot of them, in which case delaying the payment of the bill becomes very important. So larger companies are going to have whole accounts payable departments to track the bills and pay them as late as possible without hopefully pissing off the vendors. Small businesses are going to say, hey, look, I want to make things as easy as possible. Therefore, I'm most likely going to pay the bills when they become due, possibly with the use of electronic transfers and recording it with bank feeds, possibly using credit cards if I need to, and still hopefully paying off the credit cards so I don't have to incur interest expense, but still basically paying them in essence as they become due. That's going to be the general idea. Now with inventory, that might be kind of an exception to the rule for small businesses because it's kind of an easy part of the flow to receive inventory if you had a purchase order, recording a bill, and then paying the bill. All right, that's the general idea. Let's go to the first tab again, and let's go back to the purchase order item. So if I go to the expenses tab, we select the drop down, and we go into the purchase order. And so now here's our purchase orders. We have the statuses, all status. If we have the open purchase orders, there are none, no more. There are none, there ain't none, no more. So let's hit the drop down, close purchase orders. That's where they're at. So that's where they're all at because we've received the inventory. So that means that the purchase order, when we created the bill, moved its status from open to close. We can also see that by going to the vendor center, and we see there's no purchase orders, so we can't sort by the purchase orders, or it's pointless to do so because there's none there. All right, so that's going to be the general idea. This is where we're standing at this point in time. Let's refresh it to make sure that we have everything set up. So if you want to compare your numbers to these numbers, then you can do so if you're following along. So here's where we're at there. Here's the profit and loss. Here's where we're at with the P to the L, the profit to the loss. And let's also open the good old trial balance, which I think is the best report for comparison's sake. Opening the ham boogie. Let's go to the reports for comparison's sake, for form's sake, for form's sake. Okay, let's go down. We're going to go to the trial balance. Just type it in there. Trial balance, and that's what we want to see so we can compare these things out. Hitting the drop down, we're going to go to the custom date range, going from 010125 tab, 022825 tab. It's running to refreshing, and this is the one I don't like. Is it in order now? It's doing something funny again. It's doing it in like an alphabetical order or something. So I still have to do this one with the classic view mode. I don't think they got the trial balance figured out proper yet. So let's do classic view, going from 010125 to 022825, selecting the drop down to see it in months, running it for the side-by-side 2025 comparison. So if your numbers tie out to these numbers, great. If they do not, you might want to check and see if your January numbers tie out. If they do, then you know you have a February data input problem. And then if your February numbers don't tie out, you might want to increase the date range to include the current date, because it's often a date issue if a number changes because of the date range increase. drill on down to that number to get to the source document, possibly putting the date properly in the month of February 2025. See if that fixes the problem. If it does not, then we'll do hopefully reports at the end of the data input of month 2, which might help to figure out the problem. So remember, what we have here, of course, is the balance sheet on top of the income statement. Balance sheet, assets, liabilities, equity. So we have the assets going from the checking account on down to the contra asset of the accumulated depreciation, liabilities starting at the AP, the accounts payable, what we focused on this time, going down to the payroll liabilities. We got the equity section is the next one in line, opening balance equity to owner's equity. And then we got the income statement, which of course has the revenue accounts up top. These are the 3 revenue, and the expenses, starting with the big one, typically the cost of the goods that are sold, as well as the other operating expenses. And at the bottom, we got the other income and expenses, gains on inventory in this case, and interest expense.